dominated the news headlines over the weekends. I've been getting updates on Twitter. Finally, the Prime Minister of Ireland deciding to concede to the fact that they need a bailout, but now the press is lambasting them.
And in addition to that, talk that the consensus in the Irish Parliament might actually fall apart and that the Irish government may struggle to actually approve the transaction. So quite a lot of uncertainty.
On off.
You know, there jokes are already going around about Ireland. The one that I liked the most was that apparently Bob Geldof and Bono are planning a fundraising concert for Ireland, which is going to be held in Ethiopia in December.
So you would pick up on that immediately. I'm sure you'll keep us updated on any Irish jokes.
But
that
you know,
come to
I think...
But what about the focus now shifting immediately to Portugal?
Well, coming back, before we depart on Ireland, I'm just going to make the point again that Ireland is not really very important. I mean, it's the 54th biggest economy in the world.
You offended all our Irish viewers last week.
South Africa is like number 25. We're talking about a country with, you know, 180 billion US dollar kind of market cap, not market cap, GDP. I'm thinking that this thing is just going to roll around.
But you know how interconnected all the European banks are, and the issue is that systemic risk that can unfold no matter how small the economy.
But that's the reason why it's in everybody's best interest to come up with some kind of bailout. And I hate the way that the bailouts always get expressed in terms of like it's going to cost every citizen of the UK £540 and every citizen of Germany X number of, you know, Deutschmarks and so on, because it's not really relevant. What it is, it's a rescheduling of debt payments and a rolling around and a winkling out of things.
So how much is it going to cost? You've got the details at hand.
Well,
how much is this all going to cost?
Well, it's not going to cost anybody anything in the sense that guarantees are going to be provided. And I'm very confident that the Irish are going to work their way out of this. And in fact, their banks are going to work their way out of it, and that the government's revenue take from taxes is going to come right. All it is a short-term funding difficulty. You know, one needs to think in regard to these things in three dimensions. In other words, clearly the balance is not there now, but in terms of the transaction over time, it's going to be fine.
But you know that bailouts lead to austerity measures which lead to constrained economic growth. Ultimately, this is a 5-year plan for most of these economies, which means that 5 years out, if we're still sitting here, we're still going to be debating the merits of the traction that we're seeing in Europe.
Yeah, but I think what's going to happen is that there's not going to be too much austerity and there's not going to be too much of a shortfall either, because in time economies will recover. I mean, Ireland has come a long way since they only grew potatoes there. Chances are they're going to have exceeded their tax revenues.
I can see this hate mail coming through from the
Irish.
They're
going to exceed their tax revenues. They're going to have budget surpluses in future. They're going to make, you know, a great impact on the European scene in the future.
All right, now something else. You see, Twitter is a great source of information that I noticed this weekend, and I see Fin24 picked up. You've now got yourself a huge amount of publicity. Your bet with Michael Jordan. He's saying, correct me if I'm wrong,
this
that
is
commodities...
Michael Jordan, the FNB CEO.
CEO of FNB. He's saying that commodities will outperform equities over the next 5 years.
I don't know where he got this idea. He must have had too much layover time at the airport. But he's decided that there's going to be like this massive return from commodities, just the prices, the index of the prices over the next 5 years, and that it's going to exceed equity returns. So the bet is that we're going to track some kind of commodity index and some kind of global equity index and see who does better over 5 years. I'm backing the equity markets.
Well, I hope you're not. Well, if you look at Standard Chartered's forecast for copper, $12,000 a ton next 2 to 3 years.
I'm very positive about commodities, make no mistake. I just think the equities are going to do better, because I think there's going to be this leverage effect in a globally expanding economy, and that commodity stocks and Asia and all this rest of it's going to do very well. I've made the point to him, though, as well, that we need to find an equities index which takes account of dividends. Because remember, the commodity index, no dividends, just the value of the prices of the underlying commodities.
And you have to take into account the dividends. So
and
if
I'm
you
arguing
win,
to him that
I
roll-up.
believe you're getting a case of wine, and I assume it will be Botany,
But
which is own wine.
This guy owns a wine estate.
Botany, very, very good wine.
And probably hugely expensive. So I've got my butt in a sling if this thing goes wrong.
Absolutely. All right, now let's look at turnaround stories. Nampak, the market liked those results. It closed at 20 Rand today, up 1.5%, outperforming the broader JSE all share. Let's go there before we do some Telkom bashing.
Well, you know, turnaround stories are a tough one, aren't they? I mean, all of us love a bargain. So everybody likes to think, well, I can get in on the ground floor before this thing's about to turn. We know that Telkom, we've seen Jeff Hedberg talking about all the results, looking great, trying to reorganize their business under considerable stress. Nampak, on the other hand, been through a lot of trouble, seems now finally to be getting their house in order. There's something to be said for businesses that have established clientele and established strong cash flows and balance sheets. But on either case, I'm not entirely sure that the underlying business is really worth a great deal going forward, and I'm not quite sure that the investment case is apparent
You
yet.
aren't exposed to Nampak?
No, and it's one that we've avoided over the years. Import threats, replacement by foreign competitors on the packaging side. But they have done a lot of housekeeping, and they've got big assets outside of South Africa which need closer look at. The market's already expecting some kind of turnaround. Telkom, on the other hand, always looks cheap, but unfortunately each set of results contains more and more negative
Headline earnings per
surprises.
share down 5.3% for the interim period. They are now getting out of multi-links. They do have acting CEO Jeffrey Hedberg at the helm, but don't you think they need to finalise that appointment? So
That would be good, exactly.
This ship has a captain to take it
Exactly.
forward.
I mean, there are people who know the telco space very well who say that the installed value of that capital base, the replacement value of that physical infrastructure of hardline, back-end, backhaul networks is worth far more than the market cap of the company. And I'm kind of inclined to agree, but they've got to stop destroying value with their active projects. And I'm thinking multi-links, Telkom Media, etc., etc.
Able, bringing you down to Able, as I said, you are exposed to this
Yes,
one,
no,
down
we're
2% to the bottom of the top 40 today. You can't be too happy about that. 36 Rand 48.
You know, I think it's been a very interesting couple of years for them. Fantastic company, beautifully run, very well organized, very focused. I think what happened in 2009 is that they had the economy contracting, and they also had funding difficulties, and they had a big crash in Ellerines, which was the furniture business they bought. They've, evident from the second half of these results, really started to step on the gas in terms of larger loans. It looks fantastic to me. I think the reason the share price sold off a little bit is that you could literally have bought this stock in early September for 30 Rand a share.
I
So
see.
the
Because
move
you're
already
exposed to the stock, you would rationalise the sell-off like that. I'm leaving it right there.